So what happens to you personally if the government defaults on its debt repayments? I'm gonna give you two parts in this video, how it affects you personally and how we got to this point. Defaulting on the debt basically means that a person, a company, or a type of institution stops making the required repayments on the debt. For a normal person like you and me, if we fail to make our credit card payments, personal loans, or car loans, the debt would go to the collection agency and we could possibly get sued by the lenders for not repaying our debts, right? And my credit score would drop and it would make things difficult for me to borrow money again, like getting a mortgage in the future. It's the same concept for the US government, but on a much larger scale. Now, I'm not a fan of making videos that give you the speculation of what could happen or what might happen, but I'm gonna give you facts and the potential outcome of the US government potentially defaulting on its debts as early as June 1st, 2023. And the United States has never defaulted on its debt in the entire history of the US, but it came pretty close in 2011 when it went through a debt ceiling crisis under the Obama administration. The US government's credit rating was actually prematurely downgraded from AAA to AA+ by the S&P in 2011, and it created a massive shockwave in the stock market. The government knows the consequences of the credit downgrading because when it prematurely happened, the S&P 500, Dow, and NASDAQ all fell massively in a single day. And one thing the stock market hates is fear and uncertainty. Investors might lose confidence in putting money with US companies if there's a possibility of declining GDP or economic growth in the foreseeable future. And all of this could lead to mass layoffs and a high unemployment rate like we saw in 2008 and 2009. Not only the US government would lose the confidence of consumers and investors, but they could lose credibility in the global economy. Do you think international investors would continue to invest in something that might not have a good investment return in the future? Probably not, right? And it's not just stocks that will most likely tank, but investors will lose confidence in US Treasury bonds, which are supposed to be one of the safest investments in their portfolios. If you have long-term or short-term bonds in your 401k, G or F funds in your TSP, or other mutual funds or ETFs that track those bonds, could take a big hit if both retail and institutional investors lose confidence in the US Treasury bonds. And a combination of massive equity and bond sell-off will be even more devastating to the US economy and its GDP. And not only the cost of borrowing money will increase, but the lack of government spending could trigger a severe economic recession. The government defense spending has ties to Boeing, Raytheon, and Lockheed, which manufacture military equipment, commercial planes, and many more. Government spending on infrastructure like roads, bridges, and energy could come to a pause, which could lead to massive job losses in the private sector that rely on government contracts. So the bottom line is that if the government defaults on its debts, the cost of borrowing for the government will increase because the government's credit scores will be shattered. The value of our dollar could also crash, which would make imports more expensive. The government could even furlough their employees without pay, which would be devastating to hiring future talents for the federal government. They could even suspend matching TSP or other employer bonuses, healthcare, and other benefits while they use that cash to repay some of their debts. And I know this all sounds scary, and I'm really hoping that we never get to that point. From what I've seen in the past, the debt ceiling has been a political tool for the politicians in DC. Personally, I think this will all blow over until we have another debt ceiling debate again. Congress knows the consequences of defaulting on its debts because they're not entirely stupid, right? And I'd love to hear your thoughts in the comment section down below about the government spending and borrowing money to stimulate the economy. And in my opinion, the government has been spending more than they make, and it's all there on the balance sheets. And even after this debt ceiling crisis, I'm not sure how sustainable it is to continue to borrow money when there's not enough revenue coming in. It's a simple budget process, right? We should be spending less than we make. The last surplus happened back in 2001 when the government actually spent less than it made due to tax cuts and the economic slowdown due to a dot-com bubble burst. And just because there are a lot of news headlines saying that the government could default on its debts, It doesn't mean that you should sell out all of your investments now. When it comes to investing, I never act on emotions and make rash decisions based on what I hear on the news. Just because someone is buying or selling investments, it doesn't mean that it's right for you. But rest assured that I don't plan to hold any treasuries in my portfolio if the government does default on its debts. Am I going to sell out my stocks? Probably not, because even during a tough economic time, I believe in the companies that I invest in. I have done extensive research on these companies to solidify my investment portfolio. And I'm always prepared for the uncertainty. And cash is king, especially during those tough economic times. I'm always going to have at least 3 to 6 months of expenses set aside in a high yield savings account that pays around 3 to 4% in interest. I'm also debt free except for my mortgage. Back in 2016, I paid off $110,000 in credit card debt, personal loans, car loans, and a 401k loan. I made a promise to myself to never get into that situation ever again. I also cash flow my business so that I don't borrow money with a high interest rate to fund my business operations. I'm going to continue to live below my means and be mentally ready if anything unexpected happens. I feel financially safe because I track every dollar that comes in and out of my personal finances and my business operations. And I'm also going to diversify my investments so that I'm not completely exposed to a specific sector. And I know that in a long-term recession, people will still need to go to Costco for groceries or go to Target to buy Johnson & Johnson shampoo. People will still need to buy energy to keep their homes powered. But I also know that during a recession, people will cut discretionary spending like eating out, traveling, or buying electronics. What stocks do you think will get hit the hardest during a recession? Those are the questions I ask myself when it comes to investing. The most important thing is to maintain a long-term perspective. And I saw the dot-com bubble burst from 2000 to 2002, the financial crisis from 2008 to 2009, and the pandemic in 2020, and high inflation in 2022. And don't forget to download my financial independence resources for absolutely free by visiting firesidechat.com/resources. You should also check out my Fireside Chat shop to check out the books and equipment I use for my YouTube studio at firesidechat.com/shopping. Now let's dive a little deeper into how we got here. The US government has about $31.38 trillion in total debt, and we've had public debt for longer than the US has been a country. And to keep the explanation simple, the standard procedure is for the president to ask Congress for money, and Congress authorizes how much money the federal government can spend. The debt ceiling became necessary after spending a lot of money on World War I and the World War II. And then in 1939, the debt ceiling had a cap of $45 billion so that Congress or anyone in the government didn't recklessly borrow money to spend money. And this data is straight from Pew Research Center, and I'll link that article in the description below. We reached the debt ceiling in February 2023 with $31.38 trillion and about $25 million left in credit. So basically, it's like maxing out your credit card limit with a few dollars to spend while you're making minimum payments on the debt. And if you look at 2020, which was the first year we all went through the COVID-19 pandemic, the federal debt spiked to an all-time high of 134.8% of GDP. So what that means is that Congress borrowed more money than the country's GDP or its economic growth in the same year. In 2022, Congress had a debt to GDP ratio of 121.2%. Federal spending has calmed down since 2020, but it is still at an all-time high from the pre-pandemic era. And economists have been warning about the debt ceiling crisis since the end of 2020. And whenever there's a recession, the government does tend to spend more money, which creates more debt because the GDP is lower with lower tax revenue and higher spending to stimulate the economy. And if you look back at the 2008-2009 financial crisis, the government spent more money to stimulate the economy, right? And I know some of these research data can be extremely difficult to understand, so I encourage you to join my private Facebook group or become a member of my channel because I have a public live stream and private group session every other Wednesday to talk about all kinds of financial independence investment and early retirement strategies. You can visit firesidechat.com/pricing or firesidechat.com/coaching to schedule your financial coaching session. And we have two types of national debt managed by the US Treasury. we have about $6.9 trillion in intra-governmental holdings and about $24.5 trillion in public debt. The government actually owes money to itself with the intra-governmental debt of $6.9 trillion, and the majority of that is for the Social Security Trust Fund. And the next largest trust fund is the Military Retirement Fund at around $1.36 trillion, as well as OPM or Federal Employee Retirement, Medicare, and other government operations. So instead of keeping cash under the government mattress, they invest in US Treasuries. Then the government either raises taxes or issues more debt to raise the required cash. The public debt, on the other hand, foreign governments actually hold a large portion of the public debt, and the rest of the debt is owned by US banks and investors like mutual funds, pension funds, and insurance companies. And Japan is the largest holder of US debt, followed by China, the United Kingdom, Belgium, Luxembourg, and the Cayman Islands. So I know there are news headlines that say our national debt is owned by China and Japan, but the reality is that most of it is owned by Social Security and pension funds right here in the US, which means most of the national debt is actually owned by US citizens. By US citizens, and I mean the Federal Reserve, which holds the largest US government debt. The Fed buys and sells Treasury securities to follow the monetary policy. During the pandemic, the Fed bought a lot of treasuries to stimulate the economy from all the shutdowns and quarantines, right? So when we went through a recession in 2020, the government had a low tax revenue, but they kept spending money, right? And where did they get their money? It wasn't from cash under their mattress, but it was actually from issuing bonds or notes, which are also known as IOU bonds, promising to pay back the money with a little bit of interest. And remember how the Fed lowered interest rates to near zero during the pandemic and making it cheap for the government, corporations, and Americans to borrow money. So the government borrowed money at a low interest rate to issue stimulus checks to the American people. And according to the Office of Management and Budget, the interest payments on the debt are estimated to be a total of about $400 billion this fiscal year. That's $100 billion more than what the government spends on veterans benefits and services, education, disaster relief, agriculture, science, and space programs, foreign aid, natural resources, and environmental protection, all combined. Is this sustainable? Probably not. I don't think the government itself wants to pay that much in interest every fiscal year to pay back its debt. But the Federal Reserve continues to hike interest rates to bring the inflation rate back down to its target rate of 2%. However, if investors lose confidence in US Treasuries, the borrowing cost for the US government could increase to compensate for the increased risk for the investors. But take a minute to read the research yourself and get educated on the debt ceiling. Let me know in the comment section down below what you think should happen to the debt ceiling. Should it exist, or should they just reduce their spending? And if you want to know more about how to invest in your future so you can retire early, be sure to check out these two videos. So with that said, I appreciate you watching my video. Don't forget to subscribe, and I hope to see you in the next video. Have a good one.